Hello and good afternoon, everyone. My name is Matthew Mocorro, and I'm excited to be here with you for our event on our Options 4D Live. And I'm going to walk you through 4 simple steps to drive consistent trading profits. Now, what's going to be unique about this strategy is it's deployable across any financial market of your choice. Now, we're going to be sticking to the equity market today, but I like to keep this live. Almost like an open forum so we can jump in and answer any specific questions that you may have. I'm going to be giving away specific trading strategies that you can deploy into the markets. This is not a presentation where I'm going to try to wow you with my proficiency and not fully walk you through exactly how we identify these breakout trades. So I'm actually giving you all of the strategies, nothing held back, full transparency. In fact, we've got an amazing simple checklist that I'm going to give out to everybody for being here today, and that'll act as a guide to help us walk through all of the strategies together. So that way you've got an actual proven roadmap that you can print, you can put next to your station while you're trading, and consistently follow this methodology today. So before we get too far down the road, I have to, it's my obligation as a responsible trader to let you know that trading in the financial market does carry risk. So if you didn't know, you could actually lose money in this market, in any market. It doesn't matter if you're trading stocks, options, futures, forex, cryptocurrency. It doesn't matter. At the end of the day, you can, in fact, lose your entire investment. That's what risk capital is. So please only use money that you could lose. Okay, you got to make sure you put food on the table, you have a roof over your head. So this is definitely not a quick money making scheme or anything like that. Trading does carry risk. All right, so make sure we always take that into consideration. Now, I want to make sure that everyone understands exactly how to participate in today's event. Okay, I don't really have a timetable locked down. Typically, an event like this will be about an hour and 15 minutes, hour and a half, just to give you an idea of timing. So I highly encourage your questions and engagement. So on front of you now in the screen is a section that says sound check. You should see a slide that says sound check. Now, if you see the slide, you should also be able to hear me clearly with my microphone, right? And then I've also got my webcam going. So this is not a canned event. This is not pre-recorded. It is 4:04, Tuesday, June 22nd. The market bell just rang and closed today's session. Okay, so this is live. So all of the examples, all of the teaching will be done here today. This wasn't recorded yesterday or a week ago. This is not what this type of event is. Okay, so let's make sure that all 3 boxes are checked. You can hear, you can see a slide that says sound check, and you should be able to see my webcam. All right, so I'm here with you live. So if all 3 of those boxes are checked, it's important that you left click your mouse inside of your box that says enter a question for staff on your control panel right here in this box, and then you can type freely, and it's like a chat. So I'll be able to see your response instantaneously on my end. So please, let's just make sure everyone's connected. Just say hello, stop what you're doing, say hello, and that way I can confirm that your system is connected properly. There's 2 connections. There's the audio, and then there's also the video portion. Okay, so we just want to make sure we take the time. I've got a hey, I've got a hello. Yes, Jay, this will be available for you to review again. Yeah, we'll have the replay. I've got Joel from Irvine, California. We've got Gene in New Jersey. Good to see you there. Fantastic. Looks like everything's working there as exactly as it should. We've got David J, Joe P. We've got Sarah Akal. Nice to see you. We got Bill from Miami. Good to see you. I can't see you as in the form of your webcam or anything like that, but I can see your comments and chats. Now, this chat is private, okay? Only you will see your own comments and questions. Nobody else in the room can see your comments, and we do that intentionally to make sure that we keep the room free from distraction. Number 1, we maintain your privacy, okay? So if I open this up to everybody, then everybody would be seeing first names, last names, contact information, and that's not the type of event this is. This is not a meet and greet. It's not an open house in the sense that everyone's handing out business cards. Remember back in the day, you hand out business cards at an event. That's not what this is. So feel free. Any question's a great question. Look at this as an actual training session. This isn't a sales presentation where once again, I just wow you with stuff and then you can't use anything I taught you unless you buy something. Okay, that's not the type of event this is. All right. So the more questions, the better. I've got Sean from Canada. We got Glenn. We've got a trader from Westminster, California. We got Vern. So it looks like, based on this feedback, looks like all is exactly as it should be. Now, I want to give out another additional tip here. If you didn't know, you can actually take screenshots of whatever I show on my screen. So if you look up into the screen now, look on your viewing window. Okay, so the actual window where you see the sound check, that's your viewing window where my slide is displaying. You should see a camera on the top of it. That camera, when you click it, will take a screenshot of whatever I'm displaying and save it to your desktop. So it's a wonderful feature of GoToWebinar that allows you to take screenshots along the way. Like I said, this is a 100% open, transparent type of demonstration. There's nothing that's going to be left to guess about, so to assume or anything like that. So just I wanted to highlight that you could take pictures, which is pretty neat, and save it and go back and review the content. Okay, so I think that's a phenomenal way to really understand by visually seeing, because we're talking about charts. We're going to be doing some chart work. So at the end of the day, it allows for a simple way to go back if you want to and not worry about waiting for the replay. All right, so I wanted to highlight that for everyone. All right, so with that being said, we're talking about a strategy that is multidimensional. We can apply it across multiple different market classes. I use this same methodology trading stocks, trading exchange traded funds, trading futures contracts, trading cryptocurrencies. This takes advantage of identifying momentum and direction. Like I said, I'm going to give you the keys to the truck. The type of education, it really replaces thousands upon thousands of dollars worth of education out there. I'm going to give you free resources. So we do provide a service called the Options Profit Generator, where me and my team hand deliver to you daily trading opportunities, trading signals. Okay, so we do offer services like that. But what you're going to learn today is the actual strategy used to find trades for this service. And like I said, once you understand this process, this 4D, I call it 4D, like 4 dimensions of trading, you're going to be able to apply this yourself. So if you want us to do it, we do offer a service for us to do it for you. But once again, in my classes and in these sessions, I walk you through exactly how to use the strategy. Okay, so that's just think of it like a VIP service, a concierge service, where if you want us to do it for you, then you can do that. Okay, but I'm going to give you the keys to the truck. All right, that's going to be the goal. Now, if you haven't heard me speak before, I would say in an event like this, it's probably about 50-50. Half of you have seen me before in other presentations, other events, other videos, and then the other half have not. So I've been in this space for over 13 years. Started off just like many of you did, but instead of me paying someone else to teach me how to trade, I, early on in my career, worked for one of the largest financial education and trading technology companies at the time. So my job was to learn the markets. And so they put time, money, and investment into me to become a master chartist. In my career, I moved my way up in that organization to become the chief revenue officer. So part of my responsibility was creating fantastic products, services, and understanding the psychological side of teaching others how to accomplish financial success. So that's what my background is. And as of 2018, I left that organization after 10 plus years in that high-paced environment. I decided to take a step back and be an active father. So I had 2 small children at the time. So I said, look, I can't operate at this 12, 13 hour a day pace, constantly trying to come up with the next great product to drive revenue. I mean, I just couldn't do it anymore. So 2018, decided to go out on my own, and I just could not walk away from this market, from this industry. I love this industry. I love helping people accomplish their goals, and I've been doing that independently ever since. All right, so that's why I'm proud to be here with you, so we can take you by the hand. I'm going to fully disclose to you an amazing, simple strategy that you can apply without any investment of money. So all I'm going to give you today is actual, tangible, strategic implementation that you can deploy. All you need to have is a charting software of some sort. I'm going to be using TradingView. I'm not an affiliate. I should be, but I'm not with TradingView. And you don't have to have a paid account. You can actually have just a free account with TradingView. If you don't want to use TradingView, you can use this on Thinkorswim, Fidelity charts, Charles Schwab charts, bar charts, any charting software that you can come across. You'll be able to actually deploy the strategies with it. Okay, so there's nothing that requires you to pay for any service or any technology to do what I'm going to share with you today. All right. I know it's different. You know, what's interesting about this event, I love being here with Investor Expo, is the fact that I'm in joint speaker events, you know, events where you've got multiple speakers. Some of you probably been in those, right? You'd have a lineup of 3, 4, 5, sometimes even 6 different presenters talking about different strategies. And at the end of it, they all have a little sales pitch. And then the next guy comes on, and then the next guy comes on. I don't really think they like me in those events, at least the presenters, because what I do when I come in is I just give away all this free content of how to trade. And so just find it always fun. But, you know, at the end of the day, we're all about providing value. All right, so with that, we're going to be very specific today. Now, there's thousands and thousands of stocks to choose from when trading. Now, like I said, this is applicable, the strategy across any financial market, but we're going to be specifically use examples in the equity markets of stocks. And then I'm going to give you, as part of my checklist, a simple formula to find and identify the best option chain. We're always going to start by finding the best stock to option to begin with. Okay, that's going to be the step that we always go through. Step 1, find the stock best poised to break out. Then, if there's an option chain that is profitable, that is appropriate, then I'm going to show you how to choose the option chain. So when you think about what I'm going to teach you of identifying stock breakouts, paired with also giving you a simple 4-step process to identify the best option chain, you're talking tens of thousands of dollars of education I'm giving to you. Okay, but I'll let you be the judge of it. But at the end of the day, let's get geared up. And I just wanted to set some of the precedent of what we're going to talk about. So rather than look at the whole bucket of 11,000 plus stocks to select from, I'm going to show you how to filter down, how to cut through all of those choices into the best 1 to 3 trades. And this can be done daily, once a day, like how I trade is at the end of the day. So it's 4:15 Eastern Standard Time. The market's closed, but this is the time where I light up and I start to go through and find trades for tomorrow. So you don't have to be an active trader. You don't have to be a scalper. You don't have to worry about managing your trades all throughout the day. I like to set trades up tonight for tomorrow. So that way I'm hands-free, but you're going to see that in a second, okay? But this is the time where I start to go through my process of identifying trades for tomorrow. Okay, so that's going to be the premise. So what we're going to do is I'm going to walk you through these 4 steps. But before I get too far down here, I want to give out this special checklist to everybody here. So I'm going to post a link. It's a short link. I'm going to drop it into the question section, into the chat. So you'll see a green notification button. And then I want you to click the link, and it's going to simply download this checklist so you can have it next to you as we're talking. And this will be our guide to ensure that we give you exactly what we promised you. All right, so in your chat box now, I'm going to send it to everybody. You're going to have this link. It's a tiny URL, literally. All right, so in that, so the platform that we're going to be using is going to be TradingView, tradingview.com. You'll see it in a second. But before we jump there, I just want to make sure everybody has that link. So I just dropped the link. It's tinyurl.com/52x, XK7KJ4. All right, don't worry about writing that down. Look in your chat box. Everybody click that, pull it up. When you click it, it's going to take you to this checklist. Okay, this is what's going to come up. So everybody check your chat box. You'll see a message from me, and it's going to say, and it's going to have this link. Okay. So it's easier to click the hyperlink, and then you're going to get this checklist. This is what we're going to use as our basis. So this is the rinse and repeat process to dive in, drill in, and find the breakout. Okay, so we're talking about single leg options. This is not going to be complex multi-leg like straddle strangles, condors, woodpeckers, nothing like that. Okay, no hummingbirds. Very straightforward option trading. All right, so this is the strategy we're going to deploy. So just make sure if you have this, you have two monitors, you can have it on the other side. If you've got a printer, you can print it real quick. That's fine too. But just know this is going to be our guiding principles to walk through this process. All right, now it may look like a foreign language. Don't worry, it's going to make complete sense as we go through this process together. Okay, so we're going to go over now, and I'm going to jump over to the market. So once again, we're using Trading View. Okay, so you should now see charts on the screen. I'm going to get rid of that. We don't need it. You should see the tradingview.com. So this is the site. So if you want to go, you can sign up for a free account. You do not have to have, once again, a paid account. 100% you can get by with a free account. Tradingview.com. It's a phenomenal charting software. All right, so this is what I like to use. I've got a paid account simply because I post content, I publish content, so it helps to get this out to our group. So that's the only reason I have a paid account. For many years, I never paid a dime for TradingView, and I could accomplish my trading goals. Okay, so just to let you know, this is 100%. You just have to get the free account. So I've got the S&P. Okay, this is the Spyder Etf. All right, so this is all based upon the S&P 500. It's an index. Okay, so you can trade this as well, but the reason I have this specific view is I'm going to start walking you through the process of our 4-step process to find the next breakout. So this is the process and flow of what we're going to do. And I'm going to explain along the way why we're doing what we're doing. So the first thing I'm going to do is I'm going to walk you step by step through this simple 4-step process. So to understand how and why a stock breaks out, you've got to understand that trading activity is the driving force to create price change. You can't have a price change without trading activity. So simple example, how much did the stock market go up or go down on Memorial Day? How much did the market go up on Memorial Day? It didn't go up at all. Why? Because the market was closed. So there was no trading activity. That means the prices were flat. Nothing happened. I know it's an absurd example, but it still makes sense. Without trading activity, there is no price activity. There's no price movement. So what we're here to talk about is how to identify momentum. We want to find out where the money's at. In the market, there are thousands and thousands of stocks to trade. There are billions and billions and billions of dollars being traded every single day. Some days there's more trading volume than there is on the other days, right? So there's a constant ebb and flow of how much volume's in the overall market. But then there's also an ebb and flow to individual stock trading activity. So your Apples, your Netflix, your Googles, your Targets, your AMDs, your Tesla. There are days where there's a lot of trading activity on that stock. There's days where there's low activity on those stocks. What you will find is time and time again, when you see a surge of activity greater than the normal activity, you will see a larger price move on average versus low volume days. This is an inarguable fact about how financial markets work. Nobody can argue against that fact. There's only a few things in the financial market that is as definitive as the fact that trading activity creates price activity. I don't know if there's another way to assimilate that or to deviate from that point, right? That is how we make money. When there's buyers and a whole lot of buyers for Apple, where does that stock price go? It goes up. You know, we've got 2 days of Prime Day for Amazon. We'll look at Amazon. I'm curious to see what their stock price is doing, right? But when there's a surge of trading activity, even on a large price stock like Amazon, you're going to see price move. Now I'm going to show you some real examples today of where a surge of activity equated to massive, massive movement in the market. So if you and I have a mechanism, a simple ability to find the surge, what stocks are actually surging above their typical volume, we are on to the right place, okay? We are on the right track. That's the first step. The second step we're going to do is we're going to deploy some simple indicators. I'm going to give you the indicators so you know exactly how to use them, so you know how to set this up. That's what we're going to use for direction. Okay, so you don't have to be a chartist, you don't have to be a master chartist, you don't have to know how to draw trend lines to take advantage of today's class. I'm going to give you a simple set of indicators, 3 of them that we use to help us identify trend. Okay, then we're going to walk through a very simple process of how to identify the timing of your trades. So I want you to think in the terms of what to trade, okay? When do we trade it? And then how do we manage the trade? And those 3 steps. Every trader, no matter if you're trading millions of dollars at a time or a couple $100s at a time, every trader must successfully, consistently answer those 3 questions. What to trade, when to trade it, how do I manage that trade? That's really all it comes down to. And for those that have been in the financial markets more than a few minutes, I know you get emails every day about the latest, greatest strategy that can make you millions of dollars. I know that's how it happens. This is what this industry is based on, right? Lots of people are flowing into the market. Lots of people are trying to make money in the financial markets. That means there's a huge billions of dollars worth of financial education and trading technology invested from you and I, the retail trader. So timing the entry is important, okay? Then we've got to manage the trade. So if you can successfully answer these 3 questions consistently and in a manner in which you can repeat it yourself, that's the level of success that we're trying to achieve. So today, using that checklist, I'm going to answer those 3 questions for you in the most simple way that I found in my 13 plus years of doing this. In my career, supported, sold, and created products over $150 million in my career. And so after all of that's taken place, I'm giving you all of this for free because to me, it's all out there in the universe. And there's no reason that you have to spend that type of money anymore. Okay, so I'm going to give it to you. All right, so that's what we're going to do today. So let's get back into the charts. I'm going to walk you through this process. And so we're going to use some real examples that took place today. So what I'm going to do is I'm going to go over to another free resource. Okay, you're going to hear me call this out a lot. So I'm going to just go to Yahoo Finance and I'm going to explain to you and show you how quantifiable volume is to growth. So I'm just going to go to the top gainers list in Yahoo Finance. You can do this every day and come to this list and consistently you will see how powerful momentum is. So this is today's performance. This is just Yahoo Finance, okay? And you can pull this up tomorrow, the next day, as often as you'd like, and you're going to see some consistencies to what makes a top gainer. So let me explain what we're looking at real quick. So this is just a simple list of the top gainers, meaning in the measurement of percentage increase. So the top stock here is Triple D 3D Systems. That's a symbol, that's a stock name. This is the last price traded. So end of the day at $36.87. This stock went up $8 today, $7.99. The percent gain is 27%. That's a phenomenal single day. That's just one day, that's just today. The next 2 categories of the columns are extremely important. This is where we can start to identify momentum. Now, momentum and volume is interchangeable. Retail traders think in terms of volume. Institutional traders think of this in the form of momentum. So when you look at this column, this volume represents the number of shares traded, not dollars, but shares traded. Now, it doesn't mean much, right? So you can see for 3D Systems here, 41 million shares traded today. So that may sound like a lot. It may not sound like much, depending upon what stocks you traditionally trade. Okay, it just may not seem like a lot. So how do we know if it's a good day, a slow day, a big day or not? Well, we need a baseline. We need something to measure that activity against. So that measurement is used by this column. Average volume over a 3-month time frame. So what that means is the average day over 3 months is 5 million shares. Now I got a comment coming in, cannot see the Yahoo screen only speaker. You must be on the mobile device. So if you're on your mobile device, you have to slide over to get your table. So if you're on a mobile device, you can only see one thing at a time. You can see the webcam, you can see the chat box, or you can just see the viewing window. So just make sure you swipe. I hope you swipe right. That means you like it. But you just got to swipe, and that's how you can change your viewing window. I got a question. Do you know how to download that Yahoo table into an Excel? I believe you can just share it, I think. You might be able to just share it or highlight it, copy and paste it, and do it. There may be an option down here too. I'll check it out for you. I've never done that, but it's probably possible. All right, so this baseline is where we get a measurement against. Okay, so we have to take the volume and compare it against something. Okay, to know, is it above volume day or below volume day? So I just want to zoom in there. I got some, want to make sure you can see the data. So 5 million is the baseline. Now, when you look at 41 million, now you've got a baseline. That's an 8-time surge, right? So you're seeing 8 times the typical volume traded on Triple D. Okay, so that's 8 times the normal activity. Stock price jumps 27%. Let's go to the next one, okay? GSAT, Global Star. Stock price jumped 23%. The average day is 21 million. That's a lot, right? 21 million. I mean, it's a $1.87 stock. It was $1.50 this morning. But it closed the day up 23, almost 24%. And the volume was 157 million shares. So is 157 greater than 21 million? Of course it is. Stock price jumps 23%. Next one down the line, up 18%. Average day is small. I would never trade this small anyways, but the logic is still there. 1,700 is a typical day. Today there was 127,000. So 10 times, 8 times the normal activity. Stock price up 18. Just go up and down the list. 79 average, 116 today, 15%. Go to Plug. That's a great stock to trade. Plug, 34 million shares, typical day. Today, 67 million shares, stock price up 14%. Sally Beauty Holdings, 1.3 million typical day. Today, 4 million, stock price up 13. Go to Clover Health Investments. I love that stock. 48 million shares, today 152. That's 3 times the volume, stock price up 12%. Right? And you just go on and on, up and down this list. Now, there's no 100% of anything in life. When it comes to trading, especially so. There'll be some times where you get a typical day and you'll see a big jump. Sometimes you'll see a big jump with lower volume. But the majority of the time, right? So let's talk about percentages and odds. The majority of the time, you will see a surge if there's a surge in price, right? Price goes up, volume is up. Those intermingly happen a lot of the time. And that's where we leverage to find what the next breakout is. So these already broke out. Okay, so when you see 8% moves in a day, you'll see the smallest one on this list. So 7% in the top 25 was Nikola Corp. Volume days, right? Volume days up and down the line. So if I can find those, get into position in hopes that tomorrow that volume continues, then we're in a good spot. That's how we correlate this process. Okay, so how do we find it? So what I'm going to do now is I'm going to walk you through how to look at volume on a chart. Okay, so we're going to start by adding volume here. So you can follow step by step. So it's a blank chart. There's no indicators, nothing on it. What we're going to do now is I'm going to add on our first indicator. So this is the first dimension of our 4-dimension trading. Okay, so there's going to be 4. This is our first indicator. Okay, so I'm just going to go to this button here. It says it has an F and a small X next to it. I'm just going to type in volume. Now, we're not using anything complex. We're just using a simple volume indicator. So I'm going to turn that on. Now, you saw on Yahoo that they use a 3-month average. Okay, we're not going to go out that long. That's 90 days. We're going to go to a smaller window of an average to find the surge. Okay, so down below is a column bar that represents the number of shares traded. And you can see, as I see this corner here, this volume, see how it's moving, it's changing. That's giving me the day by day volume. I say day because I'm on a daily chart. I'm 15 minutes, 1 hour, I'm on a daily. So a whole day goes by. That's my open, high, low, and close price, plus the number of shares traded, which is volume, okay? But once again, I've got to have something to measure it against. So I'm all about visual aids. I want to make this so we can visually understand what's happening. So that's why we're using indicators, to make it simple to see action, okay? So I'm going to double click here inside of any of the column area down here, and I get this box that pops up. What I need to do is turn on this volume moving average. So very similar to we had the top gainer list of Yahoo, how it had this average volume. I don't want the average volume. I don't want 9 months. 90 days. That's too far out. So we're going to get a little tighter. So instead of using a 90-day like Yahoo Finance, we're going to use a 20 bar moving average, 20. So you got to check this box, and then I'm going to show you the MA length is 20. Okay, so this is the first setting. So 20 MA length. When this is on, I'll make this a little thicker. I've got a change to the indicator. Okay, so you can see now I've got this trend line. It's actually a moving average. So it's a rolling 20-day average of the number of shares traded. Okay, so now in this data box, you see that data box where you see the numbers changing and the volume indicator. It's now comparing and giving me a snapshot of what's the average in orange. I've got mine set to orange. So after today, so you can see the date, June 22nd, that's today's activity. The average 20-day rolling average was 59.5 million shares traded. The green number is the actual number of shares traded today. So today there was 57 million shares versus an average of 59. So that's considered below average. It's almost right at it, right? But that is below that average. That's a below average day. If I go to yesterday, the 21st, which was Monday, you can see we had a surge of activity. Because yesterday there were 72 million shares, almost 73 million, versus an average of 59.2, right? So that's above volume day. So instead of having to read the numbers, all we have to do is look to the column height. Okay, so these are columns. This is a simple moving average, simple. First indicator is the volume indicator. That's the first set. Now the beauty of this, I'll show you how to save this template so you don't have to recreate this every time. You just save it. Free accounts can save this, or paid accounts can save this on TradingView. Okay, like I said, my goal is here just to give you as much content as I can in the time allotted. All right. So this is volume. Okay, so now if I look to the bottom here, I can see very quickly the days where we were above volume versus the days that we're below volume. And what you'll find as I zoom in here, I want you to look at these bar heights, how much spread we had between the high and the low price, okay? And I'm going to show you this in terms of percentages, okay? So let's go to this day. So this is the 16th of June. You know, today's the 22nd. So this was Wednesday last week. You can see what I consider a dry spell, okay? So when there's extended periods of time where we're below volume, you see down here, we went through quite the spell all the way from the 20th of May all the way till June 16th of low volume activity. you can see how flat we stayed. I mean, we stayed in a relative tight range. And this happens time and time again. So let's start here. I'm going to get the high to the low. And I'm just going to draw these lines. And all I'm doing is representing this low volume period. So you can see here we started to go below volume. And then right before this spike, you could see this range, this trading range, 3%. 3% range in almost a month. Okay, that's a very tight range of movement. If you look at the last few days of this volume, we went down 2%. Okay, see the volume days. And then we had an up move of another 1.5. Okay, so that's 3.5, almost 4% moves in just a 4-day period. Okay, so we went through a range of about 20 days of only 3%. Then in 4 days, we went about 4.5%. So you can see over time how volume days will consistently drive a higher price move than lower volume days. And you can do this across any symbol. I mean, you go to like Apple or something like that, a large, well-known stock, of course, and I go to Apple, and you can see the same look and feel, right? Volume starts to become a leading indicator. I mean, look at these volume days here. Look at these high-low swings. Just look at how high to the bottom of the candles you're seeing. Larger price moves versus these small little bars. You see these small bars? See how tight that high and low is? And you'll start to see, if I zoom out, that the majority of the time, we're under volume. If you go back and look at your home run trades, the trades you go home and brag to your friends and family about, maybe not brag, but you know, if you're sitting there at a barbecue, hopefully you're out barbecuing now with all the latest COVID lockdowns, you know, hopefully lifting across the rest of the country, right? Yeah, I'm in Florida, so I'm in, you know, we've been fairly flexible. You know, we've been having, you know, family gatherings for quite some time here in Florida. But, you know, when you're sitting there chit-chatting and people find out you're a trader, and, you know, you always go to that 1 or 2 trades where you hit that big home run, you know, the one that you write home about and tell everybody that you know about, right, that asks. If you go back and look at those trades, I guarantee you found yourself in a pre-breakout pattern setup. Okay, that pre-pattern breakout that you hit the home run with is what I'm giving you today. Okay, I'm going to give you that ability to find those potential breakouts every time you want to trade. That's the goal. Okay, so as we walk through volume, you're gonna start to see how the price action runs when we are surging above activity levels. Now, when you get big spikes, right? So if I go back here, and let's go to the end of the year last year, you see these big old bars, big old column heights. Look at these price swings that happen. It doesn't just end, okay? You don't have a day of volume and then it just slows down. You'll see those volume days carry momentum for days at a time, sometimes weeks at a time. And it all starts with momentum. It all starts with that breakout created by trading activity, all right? So that's what the whole premise is of finding those breakouts. So when we have indexes like these up, we're looking for telltale signs of where to go hunt and peck and find the next breakout. So look at the NASDAQ. Okay, so this is the Qs, triple Qs here, the QQQ. It's the strongest index of the 4. Okay, so of the SPY, the Russell 2K, and the diamonds, the NASDAQ 100 is the strongest index. And you'll start to see this as I layer on the other dimensions of the trading setup, okay? Here's the close, another bullish day to the NASDAQ. The volume actually started the momentum on June 16th, right? And you can see how it's still carrying this momentum up. Even though we had a below volume day today, we still had enough momentum built into this to keep driving the price of the Qs higher than where we opened. So we opened down here, we closed here on the day. That represents a bullish day, you know, up almost a full percentage point today. Momentum is not a one-time event. Momentum is the kickstart, all right? So let's keep that in mind. So as we're walking through this 4-step process, the volume surge, what I just gave you allows us to quickly identify when a stock is surging, when it's not. So when I'm going through a long list of stocks, as I'm evaluating and monitoring and searching through lots of stocks, watch how this works. This is one of my watch lists. So now I can click on them and look at the visible recognition that's here, right? So for Virgin Galactic Holdings, I love this stock. For space, SPCE, look at the chart. Volume day, right? See the column right above the volume for the day? Look at that bar. This high-low move today, 11%. 11% today, right? We were in a dry spell, and then boom, today, rocket ship, right? 11% stock price move on a $35 stock to open the day to close at 11% gain. That's a phenomenal single day. And what drove that move, right? Volume. Low volume day, tight, high, low spreads. That's on the next symbol. I'm just clicking on the symbol. Below volume day. Saber, below volume day. Just look at the volume on the bottom. GameStop. That's a meme stock, a Wall Street bet stock. Low volume today, okay? BXRT, low volume day. Low volume day. Tesla, low volume day. So Apple, pretty much right at volume day. CNP. Okay, so visually, we can quickly understand what's happening just by flashing through. That's the visual process. Okay, so now let's start to jack this up a little bit. There's MasterCard at a volume day. Look at MasterCard, big old $300 stock, surge of activity, 300,000 shares more than normal, big old bar for MasterCard. I love trading Ford. All I'm waiting for Ford is a new entry. It's not there yet. I'll show you why, but I always have Ford in my watch list. Great options on it. That's why I like trading it. You know, so I can just flash through. So it's very simple to move through a big list of stocks to understand what type of day they had, right? Just flashing through, seeing where the volume is compared to the average, right? But now let's layer on. Let's start to really layer on the volume, okay? Volume, and the second process is to understand the direction. Okay, so I'm going to really simplify direction for you. We're going to think in terms of direction using 3 indicators. Very simple indicators. So what we're going to do now is add our other 3 with volume to make 4 dimensions. Volume and then 3 moving averages equals 4. So this is not exponential. These are simple moving averages. So we're going to add 3. So click it 3 times. You can see here I've added 1, 2, 3. Now I'm going to set these up so I get a stack effect looking at multiple data points. So these are going to be our trend lines. Trend lines. So they're all set at 9. You see these 9s? We're going to change these. Okay, so the first one, we're going to set this to a 10 length. So 10 is the first one. Second one, we're going to set as 20. I'll explain what they mean and why we're selecting these time frames. Then the last one's going to be 40, 40. Now I'm going to change some colors here just so we get some consistency in what we look at, make this easier. So I like my 40 moving average red. I like my 20 set at orange. And I like to make them a little thicker so I can see. And then the 10, I'm going to leave blue. I'm just going to make them a little bigger. There we go. So this is our 4 dimensions stacked on top of each other. Okay, so 10, let me move this down here. So yours should look like this. Remember, you've got that camera button in your viewing window. So if you want, take a screenshot. I'll show you how to do it. So here's that little camera button. Okay, should be somewhere above here on your viewing window. Click that camera button. Whatever's on my screen, you will save it to your desktop. Or you can put it wherever you want, but it's automatically defaulted to go to your box, okay? Your desktop. I said box, but you get my point. Wherever your files are stored. All right, so now you can have this. I just gave you a very simple yet effective, and you're going to see how effective it is. So what this replaces, it replaces the need for you to be a master chartist like me. Okay. Once again, if you remember my story early on, I got paid very well for over a decade to become a master chartist. I had to create products, services that worked. So I had to be proficient in trading so then I could help orchestrate as a chief revenue officer the next great product, right? So I had an awesome opportunity in that regard. So what I found is that the hardest thing to teach someone else is how to draw on a chart. That's why there's only so many great artists, right? You know, your Picassos, your favorite, whatever your favorite artist is, if you have one. There's not a lot of them, right? 1%, less than 1% of the population are considered master artists, right, of their craft, right? Drawing is an art form. Chart work is an art form. And what that leads to is too many opinions. You know what they say about opinions, right? Everybody's got them. So that's subjective. This becomes objective. So even indicators are lagging. So I'm not arguing that these are lagging because they are. Because the essence of how they work is based on taking, for example, the 10-day moving average. The 10, I say 10-day because I'm on a daily chart. If I'm on a 1-hour chart, it's 10 hours based upon the setting here. So if I hide these for a second and just look at the 10, I remove the other two, okay? I'm just looking at the 10-day moving average. It's going back and running a rolling average of the close price for the last 10 bars. That by itself, that definition is a lag. It's a trailing 10-day average. The 20 is a 20-day rolling average. The 40 is a 40-day average that's rolling, so it's constantly being reevaluated. So in essence, it is a lag, okay? But I would rather teach to and train to something that stays consistent. The 10-day calculation here is the same. So you all, if you're following along with me on your TradingView account, you will see the same pattern. Your charts will look identical to mine right now. If you just have the 10, then as you turn on the 20 and the 40, your charts will look exactly like this. Your volume, if you have it set the way I have it set, you're having the same look and feel. So that way, when you're asking questions in class and I pull it up, I'm seeing the same thing you are. I don't have to worry about knowing how well of a trader you are, how well of a chartist are you, how long have you been in the financial markets. You know, I don't have to worry about that. I could teach the same method, and then we all see the same thing. You see what I see what you see. And that allows for such a strong base for us to work together on, right? So it's very simple methodology. The close price is the most important price. So all we're doing is we're visually identifying where is the close in relationship to those three moving averages. So the first moving average we're going to see ourselves with is the 10, because that's the closest to the current price, right? It's only 10 days back. So the close is above the blue, which is the 10-day, right? That indicates bullish. Now I'm going to get two time frames in one snapshot. Now I'm going to look to where is the close in relationship to the 20 moving average. It's above it. Think bullish. The final line in the sand is the 40. Okay, so that's a larger look back in time. And if I'm above that, I'm also, once again, bullish. Okay, so all three of those trends are below the current price. That gives us an uptrend. Okay, versus if I go to something like Walgreens. Is Walgreens bullish or bearish? Where's the latest price versus those three trends? It's below it. It's bearish. So now, very simply, we can pull up chart after chart. Spice is bullish. INO, I'm going to teach you sideways, okay? Anytime you see the price in between any of these levels, okay, so right now we're between the 10 and the 20. I want you to think sideways, okay? I want you to think to the right. Believe it or not, stocks go in three ways. They go up, they go down, they go sideways, okay? So I want to make this as simple as possible, sideways. Genie, bearish. Saber, sideways. See, we're right there, sideways. GameStop, sideways. See, we're in between. VXRT, sideways. Okay, we're in between them. DraftKings, right at it, sideways. See how we're right in between? That's sideways. Okay, Tesla. Oh, Tesla's coming out of its bullish move here. See how we close just above the red? Oh, Tesla. Keep your eye on Tesla to go bullish. All right, Apple, bullish. You see this now? So now we're able to quickly filter through and fly through charts visually. CNP, bearish. Adobe, bullish. Okay, we can go to indexes. Let's go to the indexes that we had up earlier. NASDAQ, bullish, right? SPY, just went bullish. Russell, sideways. We're in between them. Okay, Diamond, bearish. We're below it. Okay, so now we can flip through these and see the market with the same lens. How cool is that? All right, now the more, some of you have an ability to draw your trend lines. You've gone through the school of hard knocks. You paid for thousands of dollars in education, and you can draw trend lines to a proficient level. Okay, that's fine. This helps you with time. Do you know how long it would take for you to draw trend lines on just this list of, there's about 30 stocks here? I can run around you in circles and be about 90% accurate on my trends versus you having to sit there and draw and consistently draw and update your trend lines over and over. And this is just one time frame, okay? So the time savings is phenomenal, okay? Because we're going to sift through lots of stocks quickly. So this allows us to quickly identify. Now, we need a check and balance system to what we're doing. So, for example, what we're going to be doing is sifting through the market, looking for the right stock to trade. To do that, we're going to have to pair these together. These two steps of the process here, these two steps, volume surge and strong direction, help us to sift through and find what to trade. Okay, that's an H. I have to draw this with my go-to webinar pen. Okay, what? This is what to trade. So the next step is the timing portion. Okay, when do we trade it? So what we're looking for is a distinct pattern at the appropriate time to actually place our trade. So those two steps I gave you all, the volume surge with the indicator on the bottom, helps us to know visually what's surging, what's not. The moving averages that we use as our trend lines helps us with the direction. Now, in my classes, so in the options profit generator, which is a signal service, it's only $399 for the year, and we give you signals every day. Okay, so nothing to be worried about on my end. That's if you want us to do it for you. Okay, that's a service of ours. This is the process we go through every day to find the signal we send out to our subscribers. Okay, this process here. So we're going to run that today because I've got to send out signals tonight. So might as well make our time worthwhile together. So we're going to actually go through this like I do every day. So we're going to go through and set this up just like I would do on my own, okay, without this class being here. It's almost 5 o'clock, so I've got to get this out by 7 o'clock. So I'm going to do that work right now. So I'm going to search through the market. Okay, so I want to find this type of pattern. Let me explain. So I'm going to go through and I'm going to show you visually the pattern we're looking for so we can time our entries. So I'm going to go to, let's go to this stock. I'm just going to show you visually what is happening. So the moment of time is crucial to this step. Now, there's lots of strategies out there using moving averages. A lot of them rely on and wait for the cross to happen. So what I did is I walked you through how to stack these moving averages to see what's happening. Yeah, Wayne, same process. So I got a question coming in. Is the options profit generator the same as options bolt-on? Yep, same thing. Yep. I've got a question coming in. Why not exponential moving averages, higher weight for near term? Those work as well. So if you're experienced with those, you can use that and adapt what I'm sharing with you. But most, traders in my experience just don't quite get the exponential side. So that's why I just always rely upon the most simple approach. So if you're familiar with exponential, then you can adapt what I'm doing towards that way. But once again, I like to try to keep things simple because I work with people that have never traded to those that have been trading for decades. So, at the end of the day, even experienced traders love this model because it's simple and repeatable. Okay, so that's why. So what we're looking for is we're looking for a break. The first break is the close. So remember, the close price is the most relevant. So back here, I just typed in MBI. I'm very familiar with this. This is one of our signal services called cash attractors, cash surge attractors. So it's a signal service that we provide as well, but for stocks. No options, just simple stocks. This was the trade setup right here that turned into over 35% in about 3 weeks. I'm showing you this so you can visually see the breakout. This is what we're looking for a new trade. Okay, so there's two hats to wear. There's the hat that I'm analyzing and just monitoring my trades, so I know, okay, is my trade bullish, is it bearish, is it retracement, is it extension, right? That's one way to use the strategy I'm walking you through. The other side is, how do I find myself? So if I flip my hat around and say, okay, I want to get a new trade, we have to get the timing down. So this is what we look for. We look for that initial break of the trend. So if I go a day before this day, and let's go to the 23rd. Okay, so this is the 23rd of February. You see where we closed? We closed below 1, 2, 3 trend lines. Okay, so that's a bearish day. What we want to do is find ourselves at the moment of a trend reversal. Okay, so this day we were bearish, then bang, the next day broke the trend. So you can see we went from below to now above those trends. That's the trend break that we're looking for. That's that strong direction step that we're looking for. All we have to then do is verify that we had a volume day that created that breakout. Because sometimes you get a break in trend, but it's not a volume break. So that's why those first two steps, volume surge, strong direction, are done together. They have to line up together. So all four of these indicators have to align themselves. So let's look at it. We closed above the 40, the 20, and the 10. Okay, that's 3 confirmations. The 4th confirmation is we had a volume day. Look down to the bottom. You see we had the column height here. The moving average was here. We had 1 million shares traded. The average is 600,000 shares. Right, so we had a surge of activity. All 4 boxes are checked. All 4. So if you come to the checklist, candles above the moving average 40, bar volume column above the volume 20 moving average, right? So those are those first 2 steps here. Okay, those 2 steps must be in alignment, right? That's just right off of the checklist. So did we close above the 40? Now I didn't put on the checklist the 10 and the 20 because if we break above the 40, that means we've got a reversal. That 40 is the last level of resistance or support depending upon what direction. So we just have to close above it on a bullish break, below it on a bearish break. Versus, okay, the timing is important. So that's a break. If I scroll out for a moment, if I pull up the chart on the 10th of December, okay, if I pull up MBI and I saw this move, we are below average, does not check the box. We did not just cross, right? We are already, what I like to say, we already left the station, okay? We don't want to get in here. This trade, the entry would have been back here, okay? So it's very important that we don't rush in. We don't want to rush into trades. So we've got to be patient and look out for that initial break. I just want to show you visually what a break looks like so you can recognize that on your own. Now, obviously, we've got a service, we'll do it for you, but if you show up to my classes that come with the program, twice a week, I have a class just like this, but it's all just geared on training and trading. I'm going to teach you this over and over and over again. But if you're going to walk away with this lesson today, I want to make sure you visually know what a break looks like, okay? So now as I flash through these, and let's just go back and let me show you a couple moves here. And you're going to start to visually look at charts and identify what a breakout in the moment of the breakout happens, right? So remember back here, this is that arrow. Okay, so that was the break. This is the stock price jump I was talking about. You see this rally? In just a matter of a few days, this stock price was up almost a little over 50% in just 10 trading days. Okay, that's what a breakout looks like. Okay, that's the timing of this versus looking at a chart, let's say here. This is not the time to get in. The trade has left the station. We need to be patient and look and wait for these breaks to happen. So you're not just going to be trading one stock. I mean, just go to the current prices, and I'm going to start flashing through these. There's just a list of stocks, and then I'll take stocks from you all. You can type them in, and I'll pull them up one after the other, and we'll look at trading opportunities, okay? But this is the visual aid that we're looking for. So no trade, ADT, no trade, okay? We can just flash through these. CC, no trade. Okay, we got to find the initial break. CSPI, see the break happened way back here. Everybody start to see that? So now as I flash, this breakout was here on the 16th. Okay, even though it's short, you can trade puts too, but this has left the station. Halliburton is sideways. Okay, it's sideways. Harmony, that's bearish. It already broke out back here. Everybody see that? This is already an active breakout. So there's pre-breakout, there's active breakout, there's the end of the breakout. Okay, that's the 3 stages of a trade. KGC, same thing. That's bearish. It already broke out. So we've got to have a way to find out which stocks are meeting the guidelines, okay? Because you're not going to run this strategy as I'm going through this. This is not your cadence. You're not going to go through and just pull up a list of thousands of stocks and punch through this list. Okay, so what I'm going to do is now give you a search filter criteria. So we're going to weed through all of these stocks in the market, and we're going to isolate our search down to the best. Okay, so let me explain this. This is a stock screener. Okay, I'm going to stay in trading view. I also use bar charts, but I'm just going to stick to trading view today, just so you can see this flow. I got a question on Tesla. Yes, exactly. Question coming in here. Do the moving averages have to be aligned? Yes. So we want to see the break. You'll start to see it. So we're going to find them, and then we're looking for that initial break above really the red. Okay, because if we break above the red, we're going to break above the 10 and 20. Okay, so it's really just the red, just to simplify the visual process. Yeah, we'll look at Tesla. Yeah, I'll show you Tesla real quick. I thought I had my watch list, but I'll add it in here. I had a different list. So Tesla is getting there. Oh my gosh, we're really close. So this is the only thing holding back Tesla for us to be a buy. So we just barely closed. You can see this visually. We just closed above this red trend, this 40, right? That's the 40. But we did not have the volume. See, look down below. So remember, we've got to have all 4. Now, tomorrow may change the ball game for Tesla. Okay, so tomorrow we may find Tesla on our list. But we're not quite there. Okay, we need a volume decision. Just think about volume as a decision. It means there's a decisive play where you see a surge of activity. That activity typically comes from institutional trading. Take away the Wall Street bets, take away the meme stocks, the GameStops, AMC. I think Wish is on that list now. Take those out of the equation. I'm not talking about those. Those are not typical moving stocks. The other tens of thousands of stocks is what I'm talking about. What we need to have, the only thing missing from Tesla to be a reversal is volume. So if tomorrow comes and we have volume and we close above this red 40, then I'd be looking for a buy opportunity for Thursday. Okay, so think about today's Tuesday. We're looking for tomorrow, Wednesday. Today's activity did not set or check those boxes. Tomorrow they may. So I'd be watching Tesla. If we get a volume day tomorrow and we get that price surge, a close above that red 40, then I'd set an entry. Okay, that's what it looks like. Yeah, you're welcome. No worries. Yes, that's the retracement. So I got a question. Sometimes they break the trend line and then the next day they come back again. So that's why we always look for all four in alignment. We look for the trend break, plus we look for the volume. Okay, so that's why we've got to be patient and wait for the stars to align. Okay, we've got to wait for the alignment to happen. Then I'm going to show you an entry strategy to help as a final confirmation. Okay, so don't get too far down ahead of me. Okay, so the final step will be timing our entry, and I'm going to give you a simple tip for that. All right. But what do we got to do? We got to search through all of it. We got to search through the market to find which ones are checking the box for us. Okay, so right now, if you click on the stock screen on the bottom, I'm going to give you these settings. I want you to take screenshots and ask questions. So to give you an idea, there are 10,000 matches right now. I don't have a single filter in. That means there's 10,928 stock symbols that we're going to sift through. We've got to quickly break those down into a manageable piece, a manageable number of stocks to go look at. And if nothing shows up, nothing shows up for the day. Okay, that's the reality. So I'm going to cut this down. So what I'm going to do is I'm going to go over to my presets. Okay, so I've got 1, 2, 3 presets here. Volume breakout, volume breakout. These are not built into TradingView. I'm going to give you the settings so you can create and save your own custom screeners. This is not pre-built. You've got to be able to create these. And I'm going to give you the recipe right now. So I'm going to go to this first one. There's the same settings. The difference is the price of the stocks. So you can see it says volume breakout $5 to $15. That's what that means. So when I click on them, it's going to cut that list from 11,000 practically down to 189 matches. Okay, so let's see that again. I'm going to clear the filters out. You see the ticker count, 10,928 matches. Okay, I'm going to turn on my screener, and now it's going to take it down to 189. Okay, so I literally just chopped the market down by dozens of percentages down to only 189 versus the 11,000 that are total out there to look at. Yeah, the volume break is volume above the 20-day average. That's the volume breakout. Okay, so we're looking at trend breakout and volume breakout. Those two together is what we're looking for. So this is the settings that I use to find and cut the market down. So let me walk you through what these mean. Okay, so I've got 6 filters that I applied against the 10,900. So we started with 10,900, and I've applied these filters to cut it down to a manageable number of stocks to go look at on the charts. So I'm going to walk you through that now. So this is all standard stuff, symbol types, common stocks, exchanges. These are all in the New York Stock Exchange or the NASDAQ. Okay, those are the 2 primary exchanges that I'm looking at. This volume, you just type in volume and it allows you to come in and here's the volume, and then you can set these. So take a screenshot of this right here. Take a screenshot right now and save this. So that way you can emulate and mirror this. This volume represents today. So I have this set at a minimum of 1 million shares traded today. That's what this represents as the most recent activity, which is today, okay? 1 million allows us to focus only on the most liquid stocks to trade. I'm eliminating anything that traded today below 1 million shares. Okay, I'm going to take that off the equation. I'm not looking at them. This is our recency. This is what happened today. Then the next filter to the right is the average volume. Now they don't have a 20, so I'm just going to use a 60 here. It's fine. I just need to have a base to help me cut through all of the noise, all of the thousands of stocks. I need to cut it down. So I've also have the average volume of 1 million shares, another form of liquidity. Okay, I want to make sure I'm trading stocks that average more than 1 million shares traded. I want to cut it down. I don't want anything that's at less than 1 million. Then below that, I've got the change percentage above 0. So any stock must have gone up in price today because I want to try to find that bullish breakout. So I don't want to find anything negative. I want to find something that's positive today. And then here I have the last price traded. I've got a range of 5 to 15. You don't have to stay there, but it allows me to chop up the market into bite-sized pieces. So I also have one from $16 to $40. Same settings, exception is the last price. So I can try to get a stack of different lists of stocks to evaluate. They do different things. You may think I'm crazy looking at $5 to $15 stocks. However, you will see a higher percentage price move on stocks less than $40 than you ever will on stocks over $100. So when I trade options, I want to see the largest percentage move to then generate that higher margin and leverage power of the option. So I like trading low price stocks that are optionable to get a greater potential breakout in a short amount of time. So I look at 5 to 15, and then I also look at $16 to $40 stocks that are optionable. Those are my two buckets I spend the most of my time in. Now, if you don't care about that price, if you don't care about how much the share price is, then you can use whatever you want on the price. What I say is inarguable is these two filters here: the volume, average volume, and the change. Okay, those three I would not change. You can mess with your pricing of your stocks there, okay, but just don't mess with those three. So now I'm down to this list of 189. Okay, so we cut it down from 11,000. Now we're down to 189. What I want to do is have a simple way to compare, without looking at the charts, what surged above the average. Okay, so I've got now added this average volume. So remember, we had Yahoo Finance up, correct? We had Yahoo Finance, and we're looking here, and we're quickly just seeing the price break, right? The volume breakout, so 5.2 average 41 million, right? Now I've added this to TradingView. That's what I did. So now I've got a baseline to measure today's activity. So let's go to the first one, ATOS. That went up 31% today. 14 million shares is the average. Today, 91 million. So that is greater than 14, right? That checks the box for us, okay? Let's go to AEI. 3.7 million shares on average. Today, 98 million, okay? 22%. That checks the box. So that way, when oh, look at Wish. 13.50, 18% up, $2. Nice. That's one of our stock trades. Any event, as we look up and down here, I'm only interested in stocks that surged above that average. So for example, let's find one that was under average. I know it's got to be here somewhere. There's one. So you see this rail, freight car, 2.5 million is the average. Today it's only 1 million. Okay, that's not above average. Okay, so that's not going to be in our list. We're not going to look at it. So what I do is I come here and I simply lower this down, and now I'm able to flip through these very quickly. You already know how to do it, right? So I'm going to visually walk through. Train has left the station, right? She gone. This was the break back here, April 29th. AEI. Oh man. The only problem with AEI is we did not have the surge where we want it to be. Yeah, we didn't have the big old surge here. So remember the columns, you just have the column above. We need to have the column above that bar. Express, no volume above that column. So just look at the column height, right? We're not above the column. There's Wish. That one already left the station. That was a trade for Monday, not today, it's Wednesday. Here's an opportunity. So we have West Water Resources. Okay, so everybody see here. That didn't take us too long. right? So this one broke back here. Okay, so here's the big volume play, but the breakout was back here. June 4th, let's go to the next one. We're looking for that initial break above that red line. And remember, all we do is following this. So bar volume above the volume 20 and the candles close above the moving average 40. Okay, we've got to see that cross. These two is the most relevant here. Once we get these two down, then I'm going to walk you through these entries and profit targets and stop losses. Okay, then from there, we're going to come down and we're going to pick the option chain. Okay, so that's where we're at. This is the stage. So we're right here in this evaluation of finding it. This is the search criteria we just went through. Okay, so we did the search. Now in the process of running the checklist, which is just these two steps, then we'll drop down into the option chain selector. Okay, just want to walk you through where we're at in the stage. There's Torch. Torch is too far gone. SCLA, we don't have the volume. See, we're below the column. We're on CHS now. Now, if you guys ran the same thing I just ran, you would see exactly what I see. That's left the station. That's left the station. And we're just looking for that initial break. Rails below average, Party City, already broke. That's bearish. So for this to be a buy, we got to break that 40. Now, I'll teach you more in class on how to be more aggressive and more creative on your trades. We'll get more advanced, but starting off, let's just keep things as simple as possible. I just want to show you the mechanism, show you the mechanics, and we're just flashing through here. So once you get proficient at this, it'll take you 5 minutes to scan through these. Some days there's more, some days there's less. But once you get familiar with what to look for, how to set this process up, you're just clicking and you're looking, right? You just click and look. PBI. Tin can steel, getting close. Fuel cell. Oh man, that's close. We just broke above the red, but we're still below the 10 and 20. Okay, so we've got to have alignment here. That one's long gone. HMC is long gone. I always think about The Office when I think of that stock company. GCI, PAGP, Magnolia already took off. Just flashing through. RRD. Oh. AEMD. Oh, that's a wacky looking chart, huh? PAA. And just keep on flashing. Got to find the break. Patience is the key. CDEV. Look at that break. Way back here. DSX, CX. I love this stock. Lots of volume on CX. HL. Clover probably already broke. Oh, Lord. Look at that chart. Extreme Networks. PBR. You can just see, look at these patterns. See how we're able to quickly see? So this is running bearish, but we've got to get a break, a clean break above. CNX, also high liquid, low cost option. Southwest Energy Corp. So what you're going to find yourself is that you'll find yourself in stocks that you may not have traded before. And the reason why is because we are literally searching for the optimal breakout patterns. We're not rushing in. We're not just trading for the sake of trading. There are times even in the options profit generator where we have a no trade day. Last night was a no trade day. I had a class, walk through the market just as we're doing now, and nothing fit the criteria. We had a couple that fit the stock criteria, but we didn't have the option set up. We didn't have it hit the options checklist, which is a secondary list if you're trading options. Okay, that's the option portion of the checklist. So we're just flashing through quickly. Oh, that one's close. Need a volume day. I don't like these acquisition companies. Okay, that's an acquisition, a FAC company. Some of the tendencies will teach you what to trade, what not to trade at times. There's GoGo. If you fly on airplanes, you know who that is. They're the ones that provide the Wi-Fi on the flights. One of my good friends was a vice president of business sales there. Cool product. GoGo Air. Huntington's not there. So this type of setup here, you see this bounce off the red? That's an aggressive entry, but we're not going to do aggressive entries. Not today. That one's close. We just didn't have the close price. So if you look at desktop metal here, so we had the volume day. I just want to show you, an example of a close one, right? So desktop metal had the surge, but the close didn't quite get high enough to give us the bullish breakout sign. You see, so it's in between still, so it's still sideways. I need to see this thing get above these trend lines. Okay, so it's close. Some of those that are close will probably show up tomorrow. Okay, so it's a nice way to start building a list. Cotty's bearish. Playa Hotels. See Yext. Breakouts back here. Axel. Oh, ING's close too. So we got a couple close. Ford's not there. The breakout was back here. There's the Ford. So we'll be able to find, as you get more familiar with the strategy, there's different entries that I'll teach you based upon bounces off of these trend lines. But like I said, for today, I just don't want to get too complex. I'm going to keep this very simple. We're going to find one. I could tell by the activity today, the bullish move, that we'll find them. We just want to make sure we get the right setup. So we're not rushing. We're not just reaching. We're being consistent in our method. And you're going to see them pop up on the screen when we get there. That was close. We didn't get the close above. Holy smokes, that was close. Yeah, you can have a breakout be red because I'll show you the entry strategy. So the entry strategy will help us as our final step to get in. So you could have a bearish candle above, because you could have a gap open and then pull back. You could have that happen. But our entry will be above that high anyways, so we'll try to avoid the whiplash as much as possible. Oh man, that was close. Sunworks just didn't have the volume. So Sunworks just pushed above that red, but we don't have the volume for Sunworks. So Sunworks is a solar company, but we did not have the surge. So we only had 2 million shares. ACB, let's see, that one, see, that's a little bit more advanced setup. These are advanced setups down here. Barclays, Mogo, GE. Oh, the GE's in the Dow Industrial. Kodak, that's like a meme stock these days. I don't want to mess with that. ORC, SFL, SMFG. All right, so let's do this. Let's get out of this low cost stock area. It looks like we're not finding a good setup. So all I'm going to do now is do the same setup. Let's go to some larger price stocks. So I'm going to go to the $16 to $40 range. Okay, so I'm just going to transition, flip over. What's it been like? 7 minutes, 5 minutes? Yeah, the simple moving average above. So we're looking for 100% is the actual calculation. I got a question. If the 10 is above the 20 and the 40, and the stock breaks above the 10, yet the 20 and 40 are sideways or down, and volume is above average, is this scenario generally a trade? Yeah, that's an advanced entry. It's definitely, I'm trying to find you all the 4 confirmations. So if you have 3, it's a trade. It's just going to have a slightly lower probability. If you have 2 of the 4, you're going to have a lower probability. You have 1 out of the 4, you're going to have a lower probability, right? So we're playing the probabilities, and all I'm trying to do is walk you through how to identify the 4 confirmational trade setup. Okay, so that's that's what I'm walking you through, is how to find through and search through that combination. Okay. So MXOC, this one is an interesting setup. Was there a volume today? There was. Okay, let me show you this. So MXOC should have options liquidity on it. Let's just double check that real quick. Oh, it does. Yeah, spreads are still high. We looked at this one last night, but the spreads were really high. They're still high today. I'm not going to look at that one with you. The stock spreads are too high. Triple D, we already saw that one. Smith & Wesson's already left. That's a left the station trade. The breakout was back here. Okay, the 4-step was back there. There's Sally's. Okay, look at that. All right, so this is what we've been looking for. All right, so take a look at this pattern. Does this check all 4 boxes? Type in a yes or type in a no. Does this check all 4 boxes? Here's the close, above the 40, above the 20, above the 10. If I draw a manual trend line, that's a trend break. That's what a trend break looks like, okay? Volume was 4 million today. The average is 1.2 million shares, okay? That is a box that is checked. There's our trade of the day. There could be more. We'll flash through a couple more. All right, so how do we trade this pup? All right, let's go to the old checklist. Where's our old checklist at? Let's see. All right, so we have checked candles above the moving average 40, right? Check the box. You know, I've seen people take this list and then put plastic over it, and then you just write on it, you know, until it becomes a habit, like a dry eraser. And the bar volume column above the volume 20 MA. Okay, 2 boxes checked. Now we've got to set the pending entry. So we're going to trade the stock. We're going to identify the stock, entry, stock profit target, stock stop loss, all 3 of those. Then we're going to drop down and walk through the option chain selector checklist. Okay, so if you're trading stocks, you'll stop right here. You'll end your process here. If you want to trade the option, then you're going to drop down into this bottom portion of the checklist. Yeah, I like it. So Wayne says, Sally up due to 2 analyst upgrades. Yeah, I would say it's up because of the volume and the price action. So cause and effect, effect and cause, however you want to look at it, the chart is telling us exactly what you read. All right. So we're going to go through and identify the setup. So the key to this is right here. This is the timing of the entry. We're not just going to rush in at any price tomorrow. Okay, so this is daily. I'm going to set this trade up for tomorrow, mañana. Okay, tomorrow. We're going to set our entry to pending buy. It's a pre-buy. So we're going to set up our buy based on a contingency that Sally is going to go up. Sally Beauty Holdings will go up, not just anywhere. We're going to be very objective. 1 tick above the previous bar high is our entry strategy. So here's the high, 22.16. Our entry is going to be 22.17. 22.17 is our pending buy. Okay, so I'm just going to use a horizontal line to indicate visually. That's not I want a ray. A horizontal ray. 22.17. Now you don't have to do all this artwork. It's just me teaching you what it looks like. Okay, so we're gonna have a pending buy. Now this is important. We only want to buy Sally if it keeps going up. The confirmation, the final step to the puzzle, is that we actually get the breakout. So how do you measure the breakout? Well, the breakout happens when the price goes up. Okay, so this helps us to avoid what may happen tomorrow, which is a retracement. So anytime you see a surge like this, you could get a retracement tomorrow, meaning the price could open and then start going down. Okay, that's a retracement. So like, see this previous gap here? We had this big old gap. We had a couple days that ran, but then it started to come back down, right? That's a retracement. That could happen tomorrow. So we don't want to just get in anywhere tomorrow. We want to continue to have this price go up. That is going to be the trigger. So you can hear me now use the term stock price trigger. Now, I use this format to also trade the option. Okay, so these prices are going to be used for me to set up my pending buy, pre-buy option trade. Okay, it's advanced, and I'll give you lessons on how to do it. We teach you exactly how to do it. But this is this process. We've started to find the stock to trade, so we're going to leverage that. So now we've got our other box checked, right? So we've got our other checklist box, one tick above the previous bar high. So now we're going to set 2 profit levels. Now, we have advanced ways we'll teach you in our classes of how to set more advanced profit targets. Okay, so I'm going to keep this simple using previous highs. So we're going to go 1 tick inside of the last 2 recent highs. Okay, so we're going to keep it very simple. So I'm going to draw them out so you can see them. So we have, this is our most recent high here. Okay, see this? This is higher than this recent high, but we want to have enough room. So if I'm going to trade the option, that previous high is only 2% away. Okay, it's not enough. We want at least 5% of a target to make it worthwhile to trade the option. We've got to have enough movement of that stock price that then falls into the options profit. Okay, we need to have more room. So I'm going to at least go to the next level. Okay, so the next level up here is about 5.5%, 5.7%. So that would be my target. First one. Now, if you like 2 targets, there's different ways to trade them. Everybody does things differently, but I'm just going to use the first target if I'm trading the option to have an exit strategy. Okay, so now we're setting the exit strategy of this. So this high is 23.47. So I'm going to go 1 tick below that. So 23.46. Profit level, we'll call it profit level 1 is 24, what was it? It's not 16. I'm just going to go pull it. 23.46. Okay, 1 tick inside of the previous high, at least 5% or more away. Okay, so that's profit level 1. Profit level 2 is going to be 1 tick inside of this bar. So that's 25.61. Profit level 2. Now, if you're trading the stock outright, the way I would manage this, take half off here, take the other half off here. Okay, so you take half off, stop loss goes to even, hit the second one, take off the other half. Okay, but that's going to be our 2 targets. I trade the option, so I'm going to use this 23.46 as my exit to the option. Okay. Now, stop loss, I'm going to split the difference between this low, this high. Like I said, we'll teach you that. I don't want to spend too much time on that yet. So we're looking right basically at this 20 moving average, which is 20.68. Okay, so that's going to be our stop. Okay. We've got many ways to teach you how to do this. This is the most simple, straightforward way to do it. Okay, so you can see the convergences that happen at these levels over time. But this is the stock setup. Okay, so if you want to stop here, you could stop here. Okay, and you just set up your stop limit buy order for tomorrow. But I'm going to take this down to the option. So what's important about this is now we've got our strategy of when we're going to buy the option based on the underlying stock. Now we have our targets to get out of the option. Now we've got to follow the checklist. Okay, so the checklist is very simple. Option chain selector checklist. Delta 65 to 75. That's going to put us in the money. Okay, I don't trade out of the money options. I don't really trade at the money options. I trade in the money. And we'll teach you all about option setups and the whys as we go into this. The second criteria is that we've got to have an option chain that has open interest greater than 100. That means we're liquid. I like that. Can we buy the option or delta from 45 to 55? Yes, you can. I have no problem getting down that low, but the majority of my trades are in that 65 to 75. So the difference is because the more in the money I am in, the less volatile the loss is. Okay, so if we're wrong, which we're wrong at times, we have a lower volatility of the loss. Okay, so that's why from a teaching perspective, I like to stay in this window. As you get more advanced, as you get more comfortable with dealing with drawdowns and all that, then that's fine. I have no problem with, I don't really go below 50, but for me, 50, 55 is the lowest I'll go just to manage some of that drawdown. And then our expiration selection, okay, 45 days to 90 days as a buffer, okay, as a time. Now we're going to take the closest to that 45-day window, and then we want to spread less than 10% of the ask. Okay, so I don't use dollars or pennies. I use a percentage of the ask on the spread. If you don't know what this means, don't worry, I'll continuously teach this to you, but this is the criteria. So then what I do is I just go into my trading account. So I use Thinkorswim. This is my class account. So I never show my live account. I mean, I'm not going to show you the profit in my live account. It doesn't matter what I do. My job is to teach you how to do it. Okay, so it is now June 22nd, 2021, right? I've got the option here, July 16th is too close. Okay, that's less than 45 days. So then we're going to fall down into August. Okay, so right there, I'm right into August. That's the most recent upcoming option expiration on a monthly. We can talk about weeklies, but I'm going to stick to monthly expirations. So we've now got to go through that checklist. Okay, so open interest is the liquidity of that option chain. Okay, so I'm more focused on open interest and volume. Okay, volume is just the number of trades. It's not how many contracts were traded or anything like that. So open interest is the secondary market for that option chain. So I want to see 100 or more. The more the better. Okay, the more the merrier. So you can see here the first option chain is this $20 strike. Okay, so this is what I look at. The delta 65-75 range, that's in that range. And it's over 100 open interest, and it's greater than 45 days, less than 90 days. Okay, that's the criteria. 1, 2, 3 on the checklist. What's the final one? The fourth checklist item is spread less than 10% of the ask price. So the ask is $3.20 a share on the option. Okay, the bid is $3.10. That's 10 cents. So 10 cents against 320 is 3%. Okay, so that checks. That's a very tight spread, which I like. Okay, it's 3% spread. So that way, if we get in tomorrow and it hits our entry price, then we're only down about 3%, which is the juice. Okay, that's what I call the juice, 3%. All four of those boxes are checked. That's the option chain we deploy. Now, there's two ways to trade the option. I like to set a contingent order. So I like to do all of this work right now. This is actually going to be my trade signal I send out to our options profit generator clients, options bolt-on clients, Signal Pro clients. You're getting this trade. So if you're with me already, you already know this is our trade for the night. Okay, for those that are in this class, you're not in my signal service, this trade's on me. Okay, so this is how I set it up. You can trade it manually, meaning you set a price alert at this price. So you set a price alert for Sally Beauty Holdings at 22.17. You get notified that Sally hit 22.17 tomorrow. Come in, go buy the option as I'm going to show you. Buy that August $20 strike and set your trade up. Okay, that's the manual way. I like to do it automated. So I set up a contingent order. So I'm going to set up all three orders. I'm going to set up my pending entry. If I go live, I'll have a stop loss and I'll have my profit target already there, ready to go. Okay, so that's going to be all done for me. All right, so I'm going to set this trade up. We have lessons on this, so don't worry about trying to master this part. If you've never done it before, that's okay. Inside of our membership area, we have this lesson here on how to set up your options. One cancels the other trade setup. Okay, so if you haven't done it, we've got a video here that's going to walk you through exactly what I just did. Okay, so don't worry if you don't get this the first time. All right, but this is what I do. I come to buy custom OCO bracket. So I'm going to trade the option contingently on the stock price breaking out. Okay, so I've got 3 orders. I have 2 open orders, 2 closing orders, and I'm going to now set up the contingency. So I'm going to start with the open. Okay, so I'm going to buy these contracts at the market if Sally Beauty Holdings marks at or above my 22.17. Okay, that's our entry. Now I'm going to set my stop loss. So the stop loss is going to be, because I always use a stop loss, I'm going to mitigate any drawdown. I'm going to leave this good till close, and now I'm just going to go back to the charts, and I'm going to set up my stop loss, which is going to be at the 20.68. So in case we're wrong, I don't give up the whole account, the whole contract. I'm going to mitigate my risk. Now I'm going to set my profit target to automatically close out based on Sally hitting the first profit level. First profit level is going to be the 23.46. Okay, so now what this does, allows me to be objective throughout the whole process. I objectively identify the stock to trade. I'm objectively setting up my option trade all up front. So as I'm into the trade, I don't have to worry about emotionally making a decision. So this is what the trade looks like. And I'm going to walk you through this. So I save the screenshot, so I post that in the signals. But you can read it. It says, here's the order. So I'm going to buy 10 contracts, 20 August expiration, $20 strike price, only if Sally marks at or above $22.17. That is only valid for tomorrow. If it doesn't hit tomorrow, let's say tomorrow it retraces, never hits this entry, we're not in the trade. We want to catch the breakout. I don't want to catch the retracement. I want to catch the breakout, meaning 22.17, okay? If it goes live tomorrow and triggers that 22.17, then these 2 other orders are bracketing my entry. So then I'll have my profit target and my stop loss live, controlling the trade. That way I'm hands-free. Once I hit send, I am literally good to go. I don't have to do anything else. So once I hit send, it now falls into a working order. So you can see it here. It says working orders, waiting conditionally. You see the status? It's waiting conditionally on what I told it to wait for, which is 22.17. That is the contingent order. It would only fire this trade if we mark at or above this price tomorrow. Okay, that's the key to this process. This level of trading and style of trading allows me to be hands-free. You don't have to do this advanced type of setup. You can do it manually if you'd like, especially getting familiar with it. But to me, I really enjoy just setting it up, because what happens is the majority of the positions will trigger in the first, why is that 23 minutes? That's weird. In the first 5 minutes of the day. 70% of the signals that I've sent out with our options profit generator have triggered in the first 5 minutes of the market. So if you're going to be doing this manually, you've got to be there at 9:30. As soon as the market opens, you've got to be sitting there watching Sally. You've got to watch it. You know, if not, you could miss the entry, you know, or, you know, but that's just the difference, right? So you have the manual way, which works. You may not get the same entry that I get, which is fine too, but it is a way to remove the manualness and the I guess emotional side of decision making that can happen. All right, that's what happens there. The option trade, the average win is about 72%. The losses average about 30%, 32%. So to give an idea, this is what we send out. So this is our active traders board. Okay, this is our traders dashboard. This is literally for option signal services. We started this program back in August. August 5th was our first signal we sent out, which was GameStop. This is before it was a meme stock, back in August 2020. This is the level of detail. So we provide, this signal date is the date we post. So tonight, my team's gonna go and input this Sally Beauty trade into this board, and then we'll send out emails and text messages to everybody who wasn't here today, all my subscribers, and that way they can set up the trade as I just set it up for you all live. So you get a bonus trade for being here today, as well as the checklist and all this education. But we track every single trade. So this is over 122 trades we've sent out since August, over 2,900% returns. Here's some of the details of the program, so you can see some of the stats. I see a lot of questions on stats. So we've got every piece of data. So since August, we've collected over 2,974% in profit with this service. Average length of trade is 19 days from entry to exit. That's with winners, that's with losers. Average day is 19 in the trade itself. Okay, so less than 3 weeks. If you take the average monthly profit, that's 330% or 3.3x. I'll explain this X. So these percentages are used by marketers so many ways. I'm going to give you the actual way it should be used, okay? When you see a sum of profits in a service, signal service, it could be a technology service, it could be education. You take this profit and you multiply that by your average investment, because everybody invests different amounts per trade. So for example, if you started with us back in August and you traded $1,000 per trade, $1,000 that was your investment into each position. Since August, you would then have over $29,000 in profits. Okay, that's what your profit levels would be. If you had $2,000 per trade, you're talking almost $60,000, right? $500 per trade, you're talking $15,000 in profits. I like to show that number because everyone has a different investment. I'm not going to put money in your pocket in the sense of just making a number up. That's the total sum with winners and losers across those 119 trades that we have captured in the market. So just take your investment size, if it's 500, if it's 1,000, if it's 2 or 3 or 4 or 5,000 per trade, and then use that as a multiplier. So you take the decimal, roll it over 2 times to the left, and that's a 29x on your investment. So it's a simple way to just look at profit and equate it to you individually. So that's why I like to show this number, because everybody has a different investment. What I like about this service is that it's low cost on the investment side. So because we look for very specific stocks, your average cost per option contract is $171. Some are $300 like today, some are $100. Okay, so over time, over 120 trades, our average contract for one is $171. So you do the math of it. If you have an average of $1,000 a trade, then you're trading 8 contracts on average with us. Some of you may trade 20 contracts. Some of you may trade 1 contract. Everyone's going to be slightly different, right? But those are some of the key highlights of the program. I've got a question on win-loss. So if you take all the data, and what's awesome is it's all transparent. You can download this data if you want. And if you're a data miner, you can go sift through and hunt and peck and find all the different, entries, go back in time and go look at it. That's 100% fine. It's up to you. But we provide every piece of the puzzle to your trade. So you can see here. So if I come up to our most recent trades, you can see here. I don't want to show you our live positions. We have people that obviously pay for this, but so here's some of our recent trades. So we lost 38% on AHT, which is Ashford Hospitality. INO. So sent out the signal on June 7th. Had a buy, a long call, August expiration, $7 strike price, stock price trigger, stop loss. We gave you all this, okay? Got in at $1.86 a share, closed out 2 days later for $3.65 a share, right? That's a 96% profit target. We had GoPro on May 26th, had a long call, July 16th expiration, $1.74 was the entry, closed out at profit target for $2.96. All automatically done. That's a 70% profit, right? So you can see up and down the board, 100% Kraft Heinz, lost 45, 142. You had a couple losers here in the middle. So you can go back historically and look at all the signals you wanted if you'd like. We also give you the actual trade ticket. So if you come in here to, this is our GoPro. So you can see exactly how we set up the trade, when we sent it out. So that's at 6:50 at night, right? I've never seen anything this transparent. You can see the final ticket, right? So when it closes out, so here's INO closing out. You can see it triggered the close at 1426, which is 226 at $3.65. That's an automated exit of the trade, right? So I've never seen anything more transparent than this. You can be the judge of that, right? But all of those numbers are provided and found by this strategy here we did with Sally. Okay, so this is our service. Now, we also teach 2 classes. I host 2 classes a week. Mondays at 7 o'clock. So we had a class last night, 7 o'clock Eastern time. And then Thursdays at 10 a.m., I host another class in the live market. So as we're delivering to you trades in our options profit generator program, we also provide live classes. So I go through trades, walk you through the process, and we find other trades too. You know, we're in the market. I walk you through the 4 Ds of trading, walk you through the checklist over and over and over again, because my goal is, with all the information that I've gathered in my years, all the people that I work with, at the end of the day, all of this stuff here on the screen is available to each and every one of you, right? Some of you are going to be able to pick this up and go on your own and go deploy the strategy. That's fantastic. You know, just hope you appreciate the opportunity to learn it and hope you use it, okay? Some of you want me to deliver you signals. That's fine too. I'll do it too, okay? But this is the core process that we roll over and over and over again. I already told you how much it is. It's $399 for the whole year of signals. On a week, we average about 4 trades a week. That check the box. Sometimes there's 3, sometimes there's 6. It all depends on the market. But we're actively rolling into the market, following this process, and then hand delivering them to you. That's the process. Great questions coming in. Yeah, so question is, if all you do is trade stocks, will this program work? 100%. You just take the stock trade instead of deploying the options, because you have the entry of the stock, you have the profit target, you have the stop loss. So you could trade the stock by itself. I have people that trade both. They'll trade both. They'll trade the stock and they'll trade the option, just so they have a level of control of their trades. Yeah, the Airtable's update at minimum every 2 days, right? Because sometimes, I mean, we'll have 10, 20 trades up. So it just depends. The most important thing is make sure we have the open active positions, because nothing changes. Stop loss doesn't change. Profit target doesn't change. You know, those things are always static. So there's no, you know, manipulation or movement. What I trade, you trade. What you trade, I trade. What I see in results. The only difference is going to be your broker may have a different price at the moment of execution than mine. Even with clients that I have that also have trading that use Thinkorswim, we'll all get slightly different entries, right? Because it's all about that moment of execution. Could be a few pennies difference between the two of us, you know, but overall, we're going to net out to close to the same results. So nothing changes on the signal. So the process is the most straightforward I've ever created. So we analyze, we deploy the 4D trading for you, and then we search and create the entire trade setup. We then send you emails and text messages with all the details in front of you. We then log, track, and then place the trades for you into the table so you can track it, monitor it, and that way you're all protected. So we'll do the hunting and pecking. We deliver them to you. This is what it looks like. This is one of our trades from November. This is just an example of what it looks like. So if you can follow instructions, trade fossil, here's the strategy, buy the long call, here's the expiration date, there's the strike price to select, there's our trigger price, there's our stop loss, there's our target. Okay, so it's entirely, and you can see, entirely transparent. I have people that never log into the trading site. They just get their phones, literally on their phone, and they get the trade signal and they just go drop it in. I mean, that's how done for you this is. So if you want to learn, so here's an example. This is Kraft Heinz. So we sent the signal out on the 2nd of of May, right? So we sent the trade on Sunday. Monday triggered the trade at $2.46. On the 24th, it exited the trade automatically based on the profit target and closed out at $4.95. That's 101% in that time period, right? So at the end of the day, we're searching across this list of about 1,600, and we're looking for that 1 to 2. Okay, that's all we're looking for is that 1 to 2. Yeah, so you got a question on guarantee. We've got a 60-day money back guarantee. 60-day money back guarantee. So if you think about how many trades you're going to see in 60 days, I hope you're not one that's just going to take them and run and make your money and leave us. But hey, sometimes I guess it happens. But if that happens, it happens, I guess, right? It's the cost of doing business. But anyways, it's 60 days. So you have a 60-day money back guarantee. I'm going to explain how it works right now. So this program is normally $708 for the entire year. Okay, but today you can get the Options Profit Generator Signal program for $399 for the year. You got a 60-day money back guarantee, daily trading signals. Now, not every day is a trade, okay? It's got to check the boxes. So you saw how patient we were as I was going through chart after chart after chart after chart with you. Okay, that we do that for you every day. But you could tell it's not just a jump in and set a trade. Okay, we're literally looking for the ideal setup. Okay, so it's only $399 for the year. You've got 2 full months, 60 days. I mean, that could be 50, 60 trades, if you think about it. Plenty of time to evaluate if we're making you money. And the evaluation is simple. You're either making money or you're learning to make money or you're not, and there's no steps to qualify. It is a time-based criteria. Just tell us within 60 days. If it's not for you, we'll refund 100% of your money. There's nothing, no hoops to jump through, nothing like that. On top of just the Signal program, you're also going to access what I like to call the Market Pro Live, where we have 2 trading sessions. Mondays at 7 o'clock at night. We just had one last night. And then Thursdays at 10 a.m. If you can't make them live, we archive them so you can watch them whenever you'd like. It's literally just like today's class, with the exception of the introduction and the end, which is right now. You take that out, and we're literally just going through analysis and finding trades. That's over 100 sessions in a year. So if you remove the signals, many people I know would pay $400 for the year just to be in 2 live sessions a week, right? So this is a huge value proposition. I think I love working with you, and I love teaching you. So this is a huge bonus that comes with the program. So for only $390 a year, you've got 2 full months. You've got access to me twice a week live. And all we do is we run through this process over and over and over again. This process here. And you're going to learn is that you're able to pick this up and be fully empowered into creating your success. So to sign up, it's very simple. All you have to do is go to optionsprofitgenerator.com. That's all you have to do. And sign up right there online and get started on your trades. You already have tonight's trade. We just went through Sally Beauty Holdings, so you already have tonight's trading signal. And just go set it up. If you're not comfortable placing the trade yet, go get a practice account. Go get a demo account and practice the trades. But that's how simple it is to get started. I went over a lot today. We're almost 2 hours into this event. I told you it was going to be a learning event. I hope I lived up to my promise of walking you through full transparency through the entire process. This process, I promise you, if you give it some time, if you apply what I walked you through today, even starting baby steps, just using the indicators for trend analysis, you'll start to see a difference in your performance. I promise. I've done this for many, many years already. The same process over and over again. And we're just going to work together side by side until you get it. We have very active, engaged rooms, lots of questions, lots of symbols that are popped up, and we just review them together as a group. And we walk away. If the setup's there, we walk away with trades, okay, on top of the service, right? Because we're teaching and training to this process. We're going to find trades. If there's trades that present themselves, we'll find them, right? And if we don't find them, then it's a no trade day. Sometimes that happens. we're not going to force any trades, right? We're all about driving a consistent method. I've got some questions in. Yeah, no worries. Yeah, enjoy the trade setup. Yeah, you're very welcome. You're very welcome. I do appreciate working with you guys as well. All right, so the signal inside of trading, I took a screenshot of it, didn't I? Yeah, I did. So this is the setup. So optionsprofitgenerator.com. I'm gonna send it to everybody so you can click on it. Oh, it looks like my team member already did. Thank you for the help there. So we got a team helping monitor the room. So thank you for that. You all should have the link in the chat box too, so you can take it right to the site. So this is how you know you're in the right spot. Optionsprofitgenerator.com. You can click here on get started, or you can read some more of the details of the program. You've got your 60-day guarantee. I mean, at the end of the day, I always get questions, sounds too good to be true, and if it is for you, at the end of the day, what if it does work, right? What if it does work? What if you are able to consistently come in and 3x your average investment? If you invest $500 a trade and our average is 3.3 times, you're making over $1,500 a month, does $399 for the year, makes sense, right? I mean, I think the answer is simple. I'm an investor. I look at return on investment. But just give us 2 months. For $399, that's the cost of one option trade for the year. One option trade. So plus you're gonna have access to all the classes, all the sessions, and you pair it all together, you've got a full-blown trading program for you, right? I mean, like I said, I've been doing this too long. There's no reason to have what I just taught you all behind a paywall. I don't think it should. The only reason we have this service because people, after they see how to trade it, they love having that fail safe to have somebody like myself deliver trades in the same process. So what happens is we send you a signal, you're going to immediately go to the chart and look at it and go, okay, that's what I'm looking for. And then over time, you're going to start to see you find them on your own. You know what that's called? That's called empowerment. That's called empowerment. And I'm a firm believer that the more you give, the more you get. And so that's why I love providing this type of service, this type of education. Nobody does it this way. I mean, I've literally given you so much information that you can apply in the markets right now and look for tomorrow. I mean, it's powerful, powerful, simple stuff there. Yeah, no worries, Raj. I get it. I get it. Yeah, we set up everything. So I walk you through how to set up every piece of the puzzle. So I also there's also another way that I teach you in class how to use bar charts. So bar charts also has a cool filter that we can also search for free. And I like bar charts because you have little options filters too. I just don't want to get too complex in today's class. But we can actually jump over into bar chart, and I'll show you how to filter by options criteria too. But yeah, so you'll actually have exact screenshots. So when you sign up, you're gonna have access to our membership area. All of our videos are there. You'll have access, obviously, to the trading dashboard, so you can see all of the trade details. And then you'll also have access to our archived webinars, so you can go back and see, what we've taught in the other classes, so you don't miss out on the next opportunity. Yeah, so it's all linked there. Yeah, so the frequency of trades, we're looking every day. So we look Sunday night, Monday night, Tuesday night, Wednesday night, Thursday night. Because remember, we're looking at night to look for tomorrow. So just like we did today, how I went through and we all found together Sally Beauty Holdings. That trade is going to be sent out via text message and SMS tonight. So everybody that wasn't here is going to set it up in their accounts for tomorrow. Then I'm going to do it again. Then we're going to do it again tomorrow night. And so it's every day we look. We just can't guarantee that there's a trade every day. But I would say historically, if you think about 119 trades, 120 trades since August, it's averaging about 12 active trades a month, meaning it's one thing to find it, right? But we've got to hit the entry. Okay, so we identify a setup, but if it doesn't hit our entry, it's not live. So it's got to break out. If it doesn't break out, we're not in the trade. Okay, so in a given month, we probably send out 15 to 16 trades in a whole month. And then of that, I would say 75 to 80% of those go live, trigger. Okay, so remember, we're looking for very precise trading setups where we've got to get multiple boxes checked to qualify for the breakout. So when the market's really hot and really running, we'll get 20 plus trades. You know, it just depends upon the overall condition. If it's a lot of volume, a lot of breakouts happening. All right. Some months are more than others. Yeah, so the average winners versus losers is running 61%. So 6 out of 10. The average winners are 72%. Any losses, the average loss is 33%. So all in all, the average net is 38% profit. Net. 38%. So every trade, if we average that, you're doubling your account every 3, doubling your average profit every 3 trades. That's the statistics. We have them all, so that's how I know it, because we have 120 trades traded and tracked all the way down to the penny. So yeah, so what's going to happen is everybody that signed up in the next few minutes, you're going to receive your welcome email. You'll have your login details, and it's just a simple URL. So for example, all you'll do is go to marketprolive.now.com. This is where you go. And you'll type in your email. So it's all based on your email. There's no password to memorize, anything like that. So all it is an email, and we tag your email, and that gives your access. So then right when you get in, you're going to see your getting started guide. You're going to see the videos of how to set up these trades. And it's a very simple process. Just like I showed you today, that's the level of detail we send out. So once you get through the first week or so, some of you may take, a couple trades just to get familiar with how to set it up. But once you learn the process of setting up the trade, it becomes second nature. These are all directional. There's no spreads. These are calls. These are puts. Single leg option trading. Because remember, we're finding stocks poised to break out, either break out bullish or break out bearish. My personality isn't to the spread side or anything like that. So I like to see stock price move. So single directional trading, single leg is what we prefer. Let's see here, Raj. So let me just double check everything. Yeah, we're good to go. Yeah. Yeah, I've seen you signed up. Yeah, I see you in here. So you're all good to go. Just saw you pop in there. I love it. Yeah. I'm glad you like it. I thoroughly enjoy this strategy, this way of trading, because like I said, what I see, you're going to start to see. And what you see, I'll start to see. And what happens is in our classes, start telling me, oh, go look at this one. And then we'll pull it up. Empowerment. I mean, and they'll be perfectly set up. That's the truly, I know it may sound cheesy, but my goal is to teach you how to do this. Now, if you want me to do it for you, that's where this program comes in. And this becomes our guiding light principle, so I can help you make money as you learn it. list. Yeah, we give you the stock and get. Yeah, this is the exact copy of the trade. So when we give you the trade, it looks just like this. This is where we give you, see, this is an actual screenshot from one of our signals on Fossil in November. This is what we send you. So all of the details are laid out. So if you can follow instructions like that, then you're going to do quite well. But like I said, the biggest transition is just understanding and learning how to set the trade up. Once you understand how to place the trade, here's another example of, show you that. So there's another example. So you get a text message just like that. So if you're going to trade the stock outright, you're just going to simply place the entry, stop loss, profit target, and you're done. Yeah, I set up the SMB trade in Thinkorswim. Yep. So this is the actual, I took a screenshot of it when I placed it. So this is Thinkorswim. You can see it pending here. So here's the pending trade. Here's the pending entry. So remember, it's waiting conditionally on 14. And step, if it does, I want to be in it. All right, perfect. You all can reach out to me at Matt at ConcordiaFinancialExchange.com. That's the URL, and we'll be able to take good care of you. All right. So with us, we want to appreciate nothing but the best. Want to wish you happy trading. For those getting signed up today, we're excited to have you join our team of options profit generator traders. So we'll see you Thursday in our next live event for those signing up. And for those that aren't ready yet, that's fine too. We'll be here when that time is right. So I would stay with it just to ensure we stay on track. All right. Yeah, Al, you're good. I see you in. Gene, you're good to go. Rajesh, I see you. Jeff, Sean, Jennifer, I've got you as well. Yeah, so yeah, you're all good to go. So you should all have your emails. You're welcome to the trade. My email is MATT, Matt. I'll send it to everybody. Matt at Concordia Financial Exchange.com. Typically is the alert time. So you'll get, because we can't control the email send. We schedule it, and then whenever the email send it out, they send it out. So the sign up link, the option So optionsprofitgenerator.com is the sign up. Yep. So that's it. Order went through. For you. Question. You can type in your phone number, your email address, get what you should you have. The sign up page, Pete. So if it's still spinning, I would say tight. Yeah, there's a lot of people in society. We just had dozens of people hit the page. Dozens. I mean, I don't know how many people are in the order process. But yeah, so if everybody, do appreciate the time. I'm going to cut this off. If not, the recording was going to be so long, no one will be able to watch it. So I do appreciate the time. You have my email address if there's any additional questions. And you know how to find us, optionsprofitgenerator.com. There is a support tab there if you need help as well. That fills out a ticket for us, and we'll get back to you there as well. But we do appreciate the time. Happy trading to you, and I look forward to having you on our program. And if today's not the day, that's fine too. We'll be here when that time is right. So thank you. Live event.